When you're thinking of buying a home, step one is to call a lender. So we have a lender here today, Miss Dawn, and she's going to tell you what happens when you give her a call and have a conversation with her. What we're looking for as a agent, we're looking for you to obtain a pre-qualification letter or a pre-approval letter. And can you kind of tell us what those two things are, what the difference is, which one's better than the other?
Mm-hmm. We can do a pre-qualification, which we just have a 30-minute conversation. I take all your information, I pull your credit, and that's a basic pre-qualification. A pre-approval is we do that step, which I always do the second step, is I run it through an automated underwriting system, and it either tells me I have an approval or I don't. And then there's also a third option. We call it a TBD loan. So we can send you all the way through underwriting. So all of your paperwork, everything goes through an underwriter, and we have an approval, and we're only waiting on collateral, which is the property. So once you go under contract, the closing is quicker, 2 weeks, 21 days maybe. And you're done. You already know that you don't need anything else from the underwriter because you're already approved.
What type of loans do you offer?
We offer just about every loan there is out there. The standard is conventional. We do VA, USDA, FHA. We do jumbos. We do specialty loans, doctor loans, that sort of thing. The loan process normally takes about 30 days to complete. Certain types, USDA sometimes is a little longer because that's a second process. USDA has to approve it as well. But normally 30-day close is pretty average.
Now, what criteria goes with those loans? Do you have to have a certain credit score?
You do, and it's all different. So we need really, for VA, you can do as low as 585, FHA 600. They say you can go conventional at 620. It's pretty difficult to do. We offer the North Carolina First-Time Homebuyer program, which is an awesome program. I should have mentioned that in the last segment. But it's $15,000 towards your down payment and closing costs. They require a 640 credit score. Normally, to get a conventional that makes sense, you probably would want like a 670 minimum score.
Now, when they give you a call, what kind of documentation, paperwork do they need to have in hand before they have a conversation with you?
So we need obviously the normal, your name, your date of birth, your social security number, your current address. If you haven't lived there for 2 years, I would need your prior addresses to get you to 2 years of living in, 2 years residency. Same for employment. I need your employer's name. I need, again, 2 years worth of employment. I need to know what you make, gross income. And I need to know if you have any judgments or pay child support or IRS tax payment agreements, things like that.
Question a lot, and I refer them to their lender. How much do they need to have in reserves or set aside for closing costs?
So I would say normally closing costs is about 4%, depending on what program you go with. So if you did North Carolina housing, first time home buyer, and you were stayed in the 250 range, you probably would not need to really bring any money to closing. Normally, for the normal loan, you don't need to have reserves. But I would say general about 4% of the
is a safe number.
Mm-hmm.
Okay. What is the biggest misconception you have seen or heard regarding lending?
So there's a lot out there, but I think the biggest misconception is the down payment amount. We have USDA and VA doesn't require any down payment. FHA requires 3.5% of this is all purchase price. And then first-time home buyers and certain other qualifying buyers on a conventional loan can put down as little as 3%. And then, of course, you can put down as much as you want. There's no limit on what you can put down, but you only need 0 to 3.5%.
What are some things that a buyer should not do once they go under contract with a house regarding the loan?
So I would say it goes back a little bit further than that. Once you get a pre-approval, don't do any of the pre-qualified, pre-approval, don't do any of these things. Please do not quit your job. Don't open any new lines of credit. Do not buy a car. Do not make any late payments. And they tell you not to switch large amounts of money around. We would just have to trace that. That's not really as big of a deal, but quitting your job, obviously, late payments or any new lines of credit, student loans, any of that, no new credit. It will kill your deal.
So Don, can you tell us a little bit about the first-time homebuyer program? I think a lot of the buyers that are just sitting around waiting, ready to purchase, are interested in seeing how they could potentially, be in that program and help with their closing cost and their purchase price.
It's an awesome program. It really is. It's North Carolina Housing. There's 2 different programs. There's a $15,000 down payment assistance program, and that's the one they want you to use. Today's rate on that was 6.75% on a 30-year mortgage. You have two loans. One's your mortgage, and the other one's $15,000 down payment assistance. We call it a silent second. There's no payment, and there's 0 interest on that. If you stay in your house 15 years, it's fully forgiven. The other one, that is credit score, minimum credit score is 640. We could do every type of loan with that, conventional FHA, VA, USDA, any of the loans can use that program. And there's different income limits, and it's household income. So anybody that resides in your home you have to be under the income limit. There's a 3% down payment assistance program that is a higher income limit, and it's stated income, not household income. So if we don't need to use your overtime, we don't use your overtime. That interest rate, I believe today was 7.5. But it really does enable you to come up with very little to no money. I mean, of course, we know you have to have your due diligence.
And your earnest money that you have to pay up front.
Right, and then any inspections.
Yes.
The only inspection we ever require is a VA pest inspection, but we certainly would never recommend that you don't do inspections. You need to do inspections.
Yes. Well, I recommend you do any and all inspections that you would like, and as an agent, I'll give you a list of potential ones you can do, and we can go through that together, and you can choose. But that is a cost that you will have to pay at the time of inspections, along with your due diligence and your earnest money. Now, what if they get into the first-time homebuyer program? What are some rules that go along with that? What can they not do with that program?
They cannot rent that house out. It has to be a primary residence for as long as that 15 years loan is intact. If you rent that house, they will call that loan. So it's for primary residence only.
Now explain exactly what call the loan means.
It means you have to pay that money back now.
All of it?
The $15,000. And it, for sure the 15, I don't think they would make you redo your original mortgage, but you would have to pay back that $15,000.
Now, what if they lived in the house for a couple of years, say 3 to 5 years, and they have to move? Do they have to then pay back all the 15, or is it a percentage?
Yeah, it's a 15-year loan. If you sell within the first 10 years, you have to pay it all back at closing. Year 11 through 15, it's forgiven at 20% a year.
What is your perspective, or what are you seeing in the market right now? From our end, the agent's end, we're kind of seeing things balance out. Not really right now. We're not seeing like a multiple offer situation, so buyers have a little bit more chance to get in there and get their offer accepted. What do you see now in the foreseeable future?
Well, everybody's guessing on what rates are going to do. Some people say March, some people say June, some people say fall. If I really knew, I'd be super rich, but I don't.
Your opinion with your experience.
Sometime this year we're expecting rates to come down. The consensus is low sixes, maybe high fives. I doubt that. We are seeing that sellers are more willing to negotiate.
Yes.
Properties are staying on the market a little bit longer. So you're right, it's evening out a little bit. It's not a total seller's market anymore.
Yeah, I would say, I was discussing with other agents around the office, I would say it's a more balanced market.
Balance is a good word.
The buyers actually, can get in there and view the house and put in their offers and kind of have negotiation capabilities.
Right, yeah, which is better for everybody.